Now that we have finished our adjusting entries and our adjusting trial balance, we can complete our financial statements, our closing entries, and our closing trial balance. So what we're looking at for our financial statements, we can start to build those, and we can take our information from that worksheet we've created. So our sales from the adjusting entries, or from the T accounts, we have total sales of 10,950. And then we have each of our expenses, so salaries expense, depreciation expense, insurance expense, now, normally we would list these in descending order, so the highest expense first and the least amount of expense last. I just put them in a random order, so I did not follow that formatting where you would put them in a specific order. Our total expenses added together. And then our net income is sales minus expenses. So we have a net income of 2,725. Okay. So we would then, we have 0 in our beginning retained earnings. I'm actually going to change all of that to accounting format. Okay. We did not have any additions to capital during the month. Then we have our net income that we just calculated. We did a $2,000 distribution of dividends. And so our ending retained earnings is $725. Okay, then we're going to take our balances in our accounts. So I'm actually just going to pull these straight from my trial balance. So my cash balance, accounts receivable balance. I am missing, so let's actually move these 3 down. I'm going to put office supplies up here. The prepaid insurance. And then we have buildings. And our accumulated depreciation. And then over here, we will put the net of our buildings minus depreciation. Format that to all be accounting numbers. and our sum of total assets. And we pull liabilities. We don't have anything for accounts payable, so that is blank. We have salaries payable, and we don't have anything in unearned revenue. So we have a total of $100 in liabilities. And then we have our equity of 180,000 and the retained earnings that we calculated on our statement of retained earnings. So total liabilities and equity. And apparently making that equity cell means that I can't sum that column. Okay, so we equal total liabilities and equity equal assets. So we know that our statement is valid. So our financial statements are complete. Now we're going to complete our closing entries. So the first closing entry we need to do is to close our revenues account. Revenues has a normal credit balance. So our storage fee revenue is going to be the debit because we need to close that account to zero. And income summary will be our credit. So we have the amount for that will be what is in the, so we have 10,950. We need that to be zero. So we're going to debit storage fee revenue, 10,950, and credit income summary, 10,950. So we'll record that in our T accounts. It is July 31st. We have a debit of 10,950. So we now have zero balance in storage revenue. And we're going to have a credit balance in income summary. Now we're going to close our expense accounts. So all of our expense accounts have a normal debit balance. So to close them, we need to credit them. So we need credit every single one of our expenses. And we're just going to go down the row, start with salaries expense of 2,100. And then the next expense is insurance expense for 400. Rent expense for 2,000. Office supplies expense for 875. Repairs expense for 950. Telephone expense for 400. And depreciation expense of 1,500. Okay, then the income summary credit, credit must equal debit, so it has to equal the amount that is on our credit side. So we're going to debit income summary for 8,225. So it's July 31st. So now our balance is, that balance should match what you have in your income statement. Okay, so that's a check, is that should match your net income or loss. Okay? So whatever the balance of income summary is after you've closed revenues and expenses should be the exact same number you have on your income statement as your net income or loss. Okay, we're now going to record to the T accounts all of these credits to close that balance out. Now all of our expense accounts have zero balances. The last thing that we need to do is, so second last thing, we need to close income summary to retained earnings. So currently, if we see on our T account, we have a credit balance in income summary. If we had a net loss, it would be a debit balance. So we have a credit balance in income summary, so we need to debit income summary for $2,725 to get it to a zero. So we're going to debit income summary for 2,000, what did we say it was? $725. Okay, and we're going to credit retained earnings for $2,725. Then we are going to close dividends with a debit to retained earnings and a credit to dividends. Okay, so that is a credit and not a debit. Okay, and then we have a debit for 2,000. This matches what we got in our statement of retained earnings and what we put on our balance sheet. I apologize for Pepper in the back. Okay, and now we have a zero balance in dividends. The last thing we need to do is then our closing trial balance. So we have these closing entries where we now have, so we debited this for 2,000. We credited or debited here. This was a credit for 2,000. This was a debit for 10,950. And then we have a credit for each one of our expenses. Okay. So we should show zero balances in all of these accounts now. Retained earnings, we actually need a zero in, and then that we credited that for 725 as part of the entries. Okay. Okay. We now adjust all of our entries for the closing entries. So we would say we would add debits and subtract any credits. For our asset accounts. Okay, so we didn't make any changes there. No changes to depreciation expense or salaries payable or common stock. Okay, but we did make changes to, so now we, okay, so now we have that our debits equal credits, and this is true all the way across. Oh, did we mess up our, yeah, there, that income summary amount should be blank. Okay, so our debits equal credits all the way across. All of our revenue and expense accounts are empty as of